Good morning, ladies and gentlemen. Welcome to SYN video conference to discuss the results for the third quarter of 2022. This video conference is being recorded and the replay can be accessed on the company's website, ri.syn.com.br. The presentation will also be available for download. Please be advised that all the attendees will only be watching this video conference during the presentation, and then we will start the Q&A session when further instructions will be provided. For those who are watching, the statements are based on the beliefs and assumptions of SYN management and the current information available to the company. These statements may involve risks and uncertainties as they relate to future events and therefore depend on circumstances that may or may not occur. Investors and analysts, journalists should be aware of events related to the macroeconomic environment, the industry, and other factors that could cause results to differ materially from those expressed in the respective forward-looking statements. Present in this conference is Mr. Thiago Muramatsu, CEO of SYN, and Mr. Hector Leitão, CFO and IRO of the company. Now, I would like to give the floor to Mr. Thiago Muramatsu, who will start the presentation. Please, Thiago, you may proceed. Good morning, everybody here present in this result statement conference. Thank you so much for your time. We are going to start our call talking about the third quarter. The first one was we sell an asset that was interesting in Suarez trade. The asset was a long time in a region, but in a geography that we do not have further activity. Strategically speaking, this selling was interesting. The transaction value is not relevant, though, to the result of the company, 14.1 million. And we have 2/3 of this asset. So this value is 100% of our marketplace, 10 million. This quarter, one more time, I believe it's the 4th year in a row that we were acknowledged in the top ranking of Open Corps connected to innovation. This year we had the 3rd rank on real estate services, and this is the reflection on how we incorporate new technologies to improve our processes, to improve productivity. So it's really nice to see 4 years in a row participating actively of innovation, technology, incorporating them in our daily activities, and we are acknowledged for that. Advancing now, let's talk about the performance of our portfolio. We start with the graphs on occupancy, physical occupancy. We see on the left-hand side, when we see the occupancy, total occupancy, shopping malls, and office 91.6 from 91.3 in the third quarter 22 to 92.6 in this current quarter, 3% increase led by the occupancy of the shopping mall. And financial occupancy, we kept a growth compared to 2022, growing from 9. I believe that it's led by the shopping malls, and we are going to see individually both categories. First, going to the corporate buildings, we kept the physical occupancy since the third quarter 22 and 23 is flat. And the meaningful change was the financial occupancy, leaving 92 to 87. But there is a difference in the analysis, physical occupancy and financial occupancy. Third quarter 21, we did not have the transaction of the assets in Faria Lima Avenue. So the renting value was higher leading to higher financial occupancy. When we see physical occupancy is in the same level, is flat, financial occupancy did not decrease. We just removed the assets from Faria Lima with a higher renting value. That's the difference. But the portfolio that we have currently compared to the same portfolio in the past, we have basically the performance aligned. Advancing to shopping malls occupancy, we have broken a barrier in physical occupation from 9.5%. And of course, the more occupied, we higher our margins. This advancement is very important in the shopping malls occupancy, physically and financially. Physically, we have broken this barrier of 95% occupancy. Financially, we are in a trend of breaking this barrier as well. I believe that we have assets that are well positioned, and currently they have big representativeness in this company. It's very important to keep on advancing here in this indicator of occupancy. Talking about the operational performance of sales in our shopping malls, the growth on sales was very interesting on the third quarter 22 and 23, almost 10% growth, 9.6% in the scenario where the inflation was beyond that. This is very important. And within this growth of 9.6, we have almost 6% of same-store sale, showing that the stores have good performance, 6% one quarter after the other. Occupancy and replacement of stores help a lot. So we are growing 22 million replacing stores. So we have more than 4% of growth replacing stores. Finalized with kiosks and events, total sales of 738 million. Now, to talk about financial performance for this quarter, I pass the floor to Hector. Good morning, everybody. Thank you so much for your attendance in this call. I will start explaining our portfolio of assets, shopping malls and offices during this quarter and 9 months accrual of the year, starting with NOI total. Malls plus offices, the growth was robust in the quarter, 14.7%, 50 million NOI. When we see the accrual of the year, the growth was 145.9 million compared to 133.6 million in 22. Breaking down the business units, malls highlights with the expressive growth of 16.4%, 40 million NOI during the quarter, and 13% of growth during 9 months, reaching 118.7 million, highlighting the revenue on rents growing a lot, although the negative IGP and the avenue for growth is discount reduction that we granted during the pandemic. We are reducing this discount throughout time. And this is directly connected to the increase of sales that Thiago has just mentioned. Offices, the growth was 11.4%, centered in the Berman 10, the development that we occupied last year, 100%, and started to see the coming. And the accrual of 9 months, a drop of 1.3. Last year, there was an effect of Berman 10 on discounts, but the growth is close to 2%, excluding this accounting effect. So robust offices and office flat, the revision was in the left. It was expected that the offices behaved in a linear way. Next slide, we see 12. To the EBITDA, following up the growth of portfolio, we see 16% 2022 of 924, 5% growth. I commented the last 2 quarters that there was 2022 two accounting facts. One, Mr. We have some actions that were revised last year, and the linearization that I told you about the Burma, this effect, the growth will be 13% during 9 months. On the right-hand side, financial result, 21.8 to 20.5 million on accrual of 9 months, drop of 19% of financial expenses and 76 of net expense compared to 94.7 last year. And here, there is an effect. The main effect here were the amortization that we had for payment through last year, especially the 2 first quarters. And now we see the effect of the debt going down and the cash is as well. So our strategy here is fruitful. And finally, observing FFO and profit, this quarter was adjusted profit compared to 1.1 million last year, and the accrual during 9 months, a loss of 700,000 compared to 9 million loss last year. So we see a trend of improvement quarter after quarter compared to profit and FFO that is of depreciation, different from most of the companies, shopping malls, this the market, we account costs in our properties. We have this effect of depreciation. That's the interesting comparative of net profit. The FFO is 15 million, growth of 56.8% compared to last year, and during 9 months, accrual 26.9 million, 6.7 last year. This growth, the 2 fronts operate and the assets perform very well, and the financial expense with less gross debt and with the trend of Selic dropping, there was an important cut in the last quarter. We are going to follow this improvement as well. Next slide, we see the debt during the quarter. We of 1.084, EBITDA in the last 12 months, 100 million. So net debt EBITDA, our action quarter after quarter, because of increase EBITDA, and this happens in the as well. Financial costs. I ask the criteria. It's very interesting. And corporate net, it's 3.45 times, always 1.5 times. So we have both covenants for the debt. We see the evolution of expenses, and then we are going to see this drop because of, so here we spend a lot of time setting 75. We have a lower Selic now. And that's the point that is volatile IPCA, that trend of flattening. So we are going with this financial expenses, net expenses improving quarter after quarter. And the amortization schedule didn't change in 2024. We still have obligation on amortization, just 5.4 million. We have an amortization of 200. And I want to see that our G was short with due effects. Important lower cost for money. On the right-hand side, the breakdown 36% IPCA and 63% CDI, and average spread IPCA 6.5, close to what would be NTB long. An interesting data that we have. And here I conclude the financial session. We can open up the floor for questions. We would start now the Q&A session for investors and analysts. If you would like to ask any question, please press the reaction button and then click on raise hand. If your question is answered, you can exit the queue by clicking on lower hand. If you would like to ask a question in writing, please enter it in the Q&A field, followed by your name and your company's name. Next question is from Mr. Reinaldo Verissimo. Mr. Reinaldo, congrats on the results. As an investor, my first quarter with profit. I'd like to hear from you if the net profit line is recurrent and it was affected by the SYN sale, and if the costs of ITM are damaging the values of SYN. Thank you so much. Reinaldo, good morning. Thank you so much. Hector here talking to you. The first question on profit, there was no non-recurring effect, and this is already an effect of the operations and the rents, all the work we have been doing, managing the debt. And about the ITM, yes, it is an asset that is open, and the impact of 9 months is 2.5 million. It is in our profit already. So yes, there is an impact. I believe that's it. I have answered your question. Just I forgot one piece about the sales. The impact of selling Forest Trade will be present next quarter. It's not here considered in this current quarter. If you want to place a question, you click on raise hand, or you just write it on the Q&A box. We are collecting more questions. Please hold. The Q&A session is closed. We would like to give the floor to Mr. Thiago Muramatsu to make the company's final remarks. I believe that, then again, I'd like to thank you so much for the attendance. This third quarter was a quarter really nice for the company. We could done some businesses reverting a trajectory of losses that we had in the last years. The performance of our assets behaved on the fourth quarter also promising, especially in the beginning of November. We have our Christmas campaigns and being welcomed by the retailers and also the customers, the consumers at the mall. I believe that we can expect and looking forward to November and December successful, keeping this growth trajectory in sales and rents. And of course, a great part of our result is affected by interest rates. This interest rate reduction giving us relief, helping us in our results. So we have a perspective on the next quarters of having good operational results as well, and some other things that we have been working hard to bring a positive impact and the results of the company. I thank you so much for your attention, for your time, Hector, and we are available and at your service if you have further questions. Thank you so much. This video conference of SYN is now closed. Thanking you so much for your attendance. Have you all a great afternoon.